to. Now let's talk about Kroger. This is new on Hot Stock, so we're not talking about Walmart, which is obviously Amazon's kind of most obvious competitor. Kroger is more a food supermarket established in the 1880s. 4,000 supermarkets and other points of presence, focused in America. So if you want a US-only food-oriented retailer, this is the one to look at. Market cap $20.6 billion. So that's smallish by US standards, but still pretty big by our standards. Price earnings ratio 13.8, dividend yield 2.2. Let's go straight to the share chart. 5-year share charts is what we use. And what's interesting about this one is you see that crack there on the right-hand side of the chart. That is where they got Amazoned. In other words, this is what happened to their share price when Amazon announced that they were getting into retail of groceries. Kroger's share price fell from $30 down to about $24. That's not nice.
It's not nice. You can still see basically the pressure in terms of the downward pressure on the price. Certainly, I think in terms of the pressures coming, I mean, if you got a 440 market cap versus 20, that's what, about 20 times, right? So that's massive in terms of difference, and certainly the reach. So I'm sure they're feeling the pressure, and I think investors started saying, possibly let's move into Amazon, and you can see if you were to compare the two charts.
Because I think the sense out there is that Walmart is big enough to compete with Amazon, and it's got a big push to go online. But the trouble with Kroger is it's smaller. It's trying to take its produce up market and focus on the higher quality type stuff. But now here comes
the big
Mr. Amazon, and they're buying into a competitor of theirs, Whole Foods, so trouble is expected.
No, certainly. I think you're looking almost like 7-Eleven or Choppies. And, you know, if you remember the 7-Eleven corner shops, that's almost like just comparison. That's what it is. But certainly, I think the pressure is going to be on, as you've seen from the price from that year.
It's an interesting company, though. I mean, I read that the founder, Barney Kroger, in the 1880s, was the first guy to come up with the idea of putting a bakery and a butchery in and under the roof of the grocery store. He was also the first guy to do prepared foods. He bought a lot of cabbage, apparently, one year, and too much. So then he got his mother at the house in Cincinnati to chop it up and turn it into sauerkraut. And they sold that, and it went so well that they then started chopping up all sorts of other things. So now they have, you know, food preparation divisions which manufacture pre-prepared meals, as one is now familiar
I think we're going to give him credit. That was innovation, because right now is you eat on the go. That's what we're doing. That's why if you go to Woolies, we've got already, you know, kind of packaged meals that are just chopped and ready to just put in the microwave. In the US,
I've noticed they have more where you kind of take your own container and then you serve out of these kind of pre-prepared food areas, and then you take it home and then you can pretend you made it by yourself.
I would do that.
In any event, Kroger looks a little bit low-powered and a little bit outclassed. So I'm going to go not hot on this one.
I'm going to also go not hot on that,
notwithstanding the fact that people are trending towards healthier eating. Okay, now let's talk local, and now let's talk Shoprite, which of course is the largest player in our local market. It's got about a 32% market share of groceries here in South Africa, but it has multiple stores across the Southern African region and some of the ocean islands. It's got the Checkers brand. It's got all sorts of things going on. Market capitalization, 130.3 billion rand. Price earnings ratio, 21.22. Dividend yield, 2.3%. Currently in transition also in terms of its relationship with Steinhoff. But tell us, what's your overall view of Shoprite as you encounter them around the region?
So certainly, I think Shoprite, they dominate. I mean, in the entire continent, this is a big brother. You know, you're not going to be able to ignore. When they made the acquisition of Checkers, that obviously was the entry almost to the lower end of the market. And any tie-up with Steinhoff, and I'm sure you heard the CEO yesterday saying this will be good for them, although the market was lukewarm about it. They were not really sure how much value they will be able to add into Shoprite. So it's back again to the highs. Remember in 2015, I think it traded about 210.
Well, let's put up that chart. So you're exactly right. It's now back there above 200 rands a share, looking quite solid.
Yes. So the last one it was about 2000 in 2013 when it went above 200. Yesterday shot up 8% to about 217 after the announcement of the results. But if you look in terms of their sales, obviously it's still a bit single digit, not double. Although the earnings per share,
I thought they did pretty well in the very soft consumer environment. So you're right, not the sort of stellar growth of
numbers we are
years,
used to. But I think in the environment and circumstances, certainly you're right there. Yeah.
Okay, so now let's try and unpack this. What I'm getting in my head around is that Christo Visa, who's a famous Cape-based investor who started Shoprite with Whitey Basson, owns about 20-something% of the shares outright.
Yes.
He also has voting control. This is Shoprite.
Yes.
Which gets him to 50% of the votes on the board.
Yes.
He's going to sell that thing that has that control arrangement and those shares to Steinhoff.
Yeah.
Steinhoff then effectively is also at the same time, or in some timed process, going to take its African assets, which are Pepcore basically, and some other bits and pieces, and create something called Star Africa. And that Star business is going to have that interest in Shoprite. So they'll still be separate entities, but effectively Steinhoff at the top will have Christo Visa going to the top level, and it will have this twofold business. That sounds okay, I guess.
Well, I don't also see any problem with it. You know, it's almost like, obviously, Mr. Vista will still control basically both companies indirectly, because by controlling Steinhoff, he's controlling Shoprite. I don't see anything. They're almost distinct market, but I think they're trying to use two very strong brands in Africa to be able to go. But one of the stories they are putting forward is that if Shoprite wants to go offshore, they can basically take advantage of the relationship with Steinhoff to be able to enter, whether it's East Europe or Europe or any other jurisdiction.
Because I guess, you know, Shoprite, of course, being mostly Africa-focused, has global aspirations, I guess, but it just can go on growing in the region more generally, and it can dovetail with the Steinhoff Pepcore team to see where there are distribution centers and other physical store infrastructures which can be shared. Because as we know, if you travel around the region, you often see these sort of newish malls that have those as anchor tenants, both the Shoprite as well as the Pepcore and related.
That's very true. I was also going to say, actually, this is almost very similar to the Barclays, but this is different in the sense that both shareholders or both institutions, which is Shoprite and Steinhoff, are predominantly South African or African. So it's different from Barclays that try to do that and rebrand with upside to go into Africa, and obviously that didn't work.
I suppose as far as Shoprite shareholders, though, are concerned, you should be pleased that they are doing well operationally. The share price is going up because the numbers look solid, and they've got good growth potential, and they seem to be holding up in terms of their market share, defending the bottom end, trying to go a little bit upscale into the healthy food and take on Woolies in the sort of upper LSM kind of category. And even if there's nothing that is relevant to you as a minority shareholder, it's just operationally sound that they're particularly continuing.
It's a fantastic business, and they still pay dividend, which is quite important for a lot of investors. I mean, if you having this dominant business, certainly I think if you're a shareholder, you certainly would require a bit of some income.
Okay, so we're out of time. As far as Shoprite is concerned,
long term, I'm going to be hot
on this one. I think I agree with you there, and certainly operationally they continue to do well. They've managed the management transition well, and at some level further ahead they could be getting scale effects in terms of the relationship with Steinhoff. Okay, so we're hot on that.